how to read your 2026 tax credit certificate. Revenue is now issuing 2026 tax credit certificates. This certificate details your tax credits, rate bands and universal social charge for 2026. Claiming all the tax credits you are due ensures you receive your correct entitlements and pay the right amount of tax. Payroll Matters in Ireland has been dealing with and will continue to deal with queries and issues PAYE workers are having regarding their certificates, particularly concerning the tax credit reductions. Payroll Matters in Ireland are advising people to check their certificates to ensure they are receiving their correct credits. People have asked me, what message will I receive when Revenue sends me new correspondence via my account? At the time of publishing this video guide, I cannot say for certain because my tax credit certificate has been in my documents since the 8th of December. I have not received any email as yet to say I have an email about a new notification in my documents on my account on Revenue regarding my 2026 tax credit certificate. I expect that in fairness to Revenue, they must have over 2 million tax credit certs to issue, and I guess that they may then inform PAYE taxpayers via email that they have unopened mail in their My Documents. I would imagine that this exercise will take Revenue a few weeks to complete. For those taxpayers who would like to check their My Documents, they can do so now. This video will assist PAYE workers both on how to access their certificate and how to read it. Now, going back to the original question. An email will issue from Revenue's email address, no reply @revenue.ie, to the mail address they hold on record for you. This email will give notice that Revenue has sent you new correspondence. This message will be displayed in the email. And normally from the second week in December, Revenue begin notifying taxpayers about the following year's tax credit certificate. They do this by sending you an email to say that you have new mail in your My Documents from Revenue. The notice looks like this one here. For PAYE customers that do not have an email, they will receive a hard copy of their 2025 tax credit certificate in the post. The details are laid out the same way whether you get your tax credit certificate in your inbox, in My Documents on Revenue, or in your letterbox from Revenue. Revenue will never contact you by email, SMS or phone call to inform you of a tax refund or bill. They will ask you to log in to your account for notifications they wish you to look at. They remind you of this fact on page 1 of your 2026 tax credit cert as seen here. Revenue does not correspond with its customers through traditional email or SMS texts, giving information or seeking personal information. Instead, Revenue uses secure online service My Inquiries to send, receive and track correspondence. My Inquiries is available to customers through Revenue online services and My Account. The only email they will send is, as we said earlier, is one to notify you that you have correspondence on your Revenue My Account, like this one, and may give you the subject that it relates to. Please always remember that Revenue will never contact you by email, SMS text message or phone call to inform you of a tax refund or a bill. We here at Payroll Matters in Ireland urge PAYE taxpayers and our subscribers to remain vigilant against fraud, as it can affect any of us at any time. We have a video here called How to Identify Scammers, Fraudulent Emails and Text Messages. This legitimate email from Revenue suggests that you log in to your Revenue My Account on www.revenue.ie, and the email will come from an @revenue.ie email address as shown here. Of course, you don't need to wait for an email to log into your Revenue My Account. You can check anytime to see if you have any unread documents. More often than not, you can have new mail in your Revenue My Account documents for a few days before Revenue will notify you with an email. The sign into Revenue online screen will look something like this, depending on your browser. The one thing to look out for is the address at the top, which must have www.revenue.ie at the beginning, here on the top left hand corner. When you click on the Sign into My Account, you will be brought to this screen to log in. For anyone that has not yet registered, you can do so by hitting the Register Now button. We have a step-by-step guide to assist you with the process called How to Register for a Revenue My Account, and the link to it is here. A Revenue My Account is a single access point for secure online services. It is a quick, convenient and easy way to perform a number of tasks. These include updating your personal details, reviewing your tax affairs, making payments and applying for certain tax reliefs and incentives. If you haven't logged into My Account within the past 6 months, or if it's your first time logging in to My Account, a pop-up screen will appear asking you to confirm that your personal details are correct. You will be asked to confirm that your address, your phone number, and your email address are correct. If you have provided Revenue with your bank details, you will also be asked if they are correct. The pop-up screen provides you with an opportunity to update your details if necessary. For example, if you have moved to a new address, if you have a new mobile number, if you have a new email address, or if you have a new bank account, you can update the details accordingly. If you are registered as being married and you change your address, you will be advised that your spouse partner's address will also be updated on their revenue record. This message will appear at the bottom of the confirmation screen to notify you of this. Before I show you how to access and read your tax credit certificate with step-by-step screens and some examples, please let me take 30 seconds to introduce myself and give you a little background. This is Padraig here from Payroll Matters in Ireland, the Facebook page and social media platform for all PAYE workers and their employers to ask, get answers, and find out about PAYE income tax returns, statutory annual leave and public holiday entitlements, universal social charge, pay-related social insurance, pensions, redundancy, week 1 basis, statements of liability, tax credits, employee and employer statutory rights and obligations, and a myriad of other work and payroll-related issues, all free of charge. Along with our Facebook page, we also have a YouTube channel called Payroll Matters, and we have a Facebook group called Payroll Matters in Ireland, and a LinkedIn and Twitter page also called Payroll Matters in Ireland, and new members, followers and subscribers are always welcome. The QR codes are here on screen, but the issue here is that you need another device to scan them. So your other option is to search for the group and page, if you so wish. As a PAYE My Account user, you can access My Documents to view your 2026 tax credit certificate in your unread documents. On the home page, you click on My Documents. When you have unread documents, you will see this goldy coloured dot on the top right hand corner. In this example, there is no little gold dot indicating that you do not have any unread or unopened correspondence from Revenue. Let us return and click on My Documents with the goldy coloured dot. Choose 2026 documents. Choose 2026 tax credit cert, as this is the one we are concerned about in this video guide. There will be 2 pages. The first page is general and its content is the same for everyone. It contains information and links to most of the material covered within this video. But the benefit of this video guide over this first page is that this is a one-stop shop for everything you need to know in a short period of time, whereas the first page has links to many pages which also contain information irrelevant to your tax credit cert. Do take note of the message at the top about revenue notifications. The second page is where all the details are. This sample is the format that relates to a single or separately assessed taxpayer, or in other words, a taxpayer that is not jointly assessed. Hence, there are only 2 columns. One for the tax credit, tax credits reduced by, and tax rate bands, and one for the amounts. Don't be concerned about the details for the moment, as we will be looking at these in detail a little later in the video. In this example of a jointly assessed couple, there are 3 columns, one for the tax credits reduced by, and one for each spouse with the amounts for each heading. Your tax credit certificate, your TCC, whether single or jointly assessed, sets out the following details for the tax year, and you can see that it is divided into 5 sections separated by these shaded areas. 1. Tax credit. 2. Tax credit reductions. 3. Tax rate bands. 4. Allocation of tax credits and rate bands. And 5. Allocation of universal social charge, USC, rates and rate bands. Section 1. Tax credits. This is a section that shows the credits pertaining to your personal situation. The following table shows some of the main tax credits and the general reliefs for the tax year as advised in the budget in October. When added together, your total tax credits are shown here as gross tax credits A. As you can see here, there are more tax credits than those shown in the table, like the age tax credit, and many PAYE workers will also have the flat rate expenses tax credit. Section 2. Tax credit reductions. If you owe tax of less than €6,000, you have the option to pay all or the remaining part of it by having your tax credits reduced for up to 4 years, and this is done as a PAYE underpayment and shows here as a reduction to your tax credits. This reduction will have been notified to you in your statement of liability for a previous year. For thousands of PAYE taxpayers, these PAYE underpayments are as a result of COVID-19, and thankfully for many, these end in 2025, and this is the final year, so this PAYE underpayment will not be on your 2026 tax credit cert. Other deductions like social welfare pensions is shown here on this tax credit certificate, and also on this tax credit certificate for a jointly assessed couple. The tax credit reduction in these cases equates to 20% of the estimated annual DSP social welfare pension. For many PAYE workers currently on maternity leave or out on illness benefit, they will see a reduction here, as this is revenues processed for taxing DSP social welfare payments. Don't worry if you don't fully understand it. It is a complex process. We have a video guide done on this which tries to explain how DSP social welfare benefits are taxed, and the link is here. As we have said, the most frequent examples of these deductions here would be for DSP maternity pay or illness payments. This is an example of maternity benefit reduction on this tax credit certificate. When all the deductions, if any, are added together, your total tax credit reductions are shown here as gross tax credits reductions B. Your net tax credits are shown here as A minus B. 3. Tax rate bands. The tax rate band for 2025 are in accordance with these tables depending on your personal circumstances. You can see in this case for a single widowed surviving partner that the 20% band is €44,000 and then reduced by other taxable income, which in this case is a pension. In this case, for a jointly assessed couple, both with taxable income, that the 20% band is €53,000 with an increase for taxable income of €11,377 and then reduced by other taxable income, which in this case is a DSP social welfare pension in the amount of €11,377.80. 4. Allocation of tax credits and rate bands. The pay-as-you-earn PAYE system treats one job as your main employment. Revenue will give your tax credits and rate band to that job. In our 2 examples, there is just one employment in the case of the tax credit cert for a single or widowed person and the tax credit cert for a jointly assessed couple. If you work in 2 or more jobs at the same time, you can divide your tax credits and rate bands between jobs. Revenue will then send out an updated tax credit certificate to you. To make sure that you pay the correct amount of tax, you can allocate your tax credits and rate bands between your existing and new employments. You can do this in My Account via PAYE services or by contacting Revenue. We'd have a step-by-step guide to assist taxpayers with this exercise. You might be receiving a pension from a former employer in the form of an occupational pension. If you are, for tax purposes, this is taken to be your main employment. Any other jobs you have are treated as second or multiple jobs. Your employment identifier, as shown here, is a unique reference set by your employer for your employment. The employment identification is unique for each separate employment for an employee. If you see tax credits allocated to an employer ID that you do not work for, or where your old employer fails to let Revenue know that you have finished employment with them, you can use My Account to cease your old job. Select View Cease Your Job on or Pension Details on the PAYE Services card to do so. 5. Allocation of Universal Social Charge USC rates and rate bands. This table shows standard rates of USC for 2025.
6.
You can see this on your tax credit cert, albeit in a less understandable format, but nevertheless, your employer's payroll system will be able to apply it correctly when these details are forwarded to them on a NORPN or a Revenue Payroll notification. We will return to the subject of the Revenue Payroll notification in just a moment. In this example, you can see that the USC rates are different. This is because the taxpayer is either over 70 or is under 70 but has a medical card. If you are under 70 and have a medical card and earn less than €60,000 per annum, then you should be on the reduced rate. We have a video here on how to inform Revenue that you have a medical card so that they can put you on the reduced rate if you earn less than €60,000 per year. And this here is the link to the video. If you have more than one employment or an occupational pension, your deduction rates for each employment occupational pension will be shown here under each employer ID number. The reduced rates are shown here on this table. And this is the way these are reflected on your 2026 tax credit certificate. Please note that there has been no change to the reduced rates in 2026. Your income will be exempt from Universal Social Charge if it is less than the exemption limit. The exemption limit for 2026 is €13,000. Those are the 5 sections of your 2025 tax credit certificate covered, but there are 3 other very important messages I want to bring to you. The first one is that on our Facebook group, Payroll Matters in Ireland, we often get asked if your employer can know from the Revenue Payroll notification whether or not you may have a second job and the details of it. The answer to this question is a very firm no. The RPN only provides your employer with the necessary information to deduct from your wages the correct income tax, Universal Social Charge or USC, local property tax, LPT. It shows tax credits, income tax and USC cut-off points, any previous pay, tax and USC deductions from the 1st of January, unless the certificate is on a week 1 or month 1 basis. Income tax and USC exemptions. The amount of LPT to be deducted if applicable. A separate RPN is issued for each of your employer's pension providers. The second important message is about a tax credit certificate issued on a week 1, month 1 basis. In certain cases, Revenue may issue you with a tax credit certificate on a week 1 for people paid weekly or a month 1 basis for people paid monthly. This is sometimes called the non-cumulative basis. It means that the pay for each period is dealt with on its own, separate from previous weeks or months. Your yearly tax credits and rate bands are not backdated to the 1st of January and do not accumulate for each pay period. Your employer cannot make any refunds of income tax or USC that may be due to you until a cumulative tax credit cert is issued. You can contact Revenue to find out why you are on a week 1 basis by using the My Inquiry service in My Account. Tax credit certs on a week 1 basis usually are issued to people in receipt of DSP social welfare benefits, but there may be other reasons specific to the PAYE taxpayer. Week 1 basis is used for various reasons. For example, where 1. There is a large reduction in your tax credits that may result in hardship for you. 2. There is a lack of information about your prior employments or earnings in the current tax year. 3. You have come from abroad to work in Ireland, but Revenue do not know how long you plan to stay. You transfer your tax credits and rate bands to your spouse or civil partner. You do not want your new employer to know the details of your previous employment's pay and tax. My third and final important message before I leave you for now is, can I ask those of you that have not already done so to hit that subscribe button and also to turn on YouTube notifications for this channel, as we have many more helpful pay, income tax and other work related guides and videos to bring you. It costs you nothing to subscribe, but can help you save hundreds or even thousands of euro into your hand on pay and tax. Go on, hit that subscribe button. Go on. I'll see you next time.